Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. So checking overnight, global equity markets again coming under selling pressure as the trade war escalates. Bond yields fell and gold climbed to a new record high on fears of slower economic growth. On Wall Street, the S&P 500 officially fell into correction, having lost more than 10% from its February 19th record closing high. A broad sell-off sent all three major indices tumbling, with losses among the tech-related megacaps, dragging the Nasdaq lower. The dominance of the Mag 7 continues to weigh on the broader market. Adobe dropped after the software company forecast quarterly revenue in line with estimates. Intel jumped after the chipmaker appointed industry veteran Lip Bhutan as its CEO. Discount retailer Dollar General reported disappointing same-store sales estimates but provided upbeat quarterly results, sending its shares higher. Shares of vaccine makers Moderna, Novavax and Pfizer gained as the White House withdrew its nomination of vaccine critic Dave Weldon to serve as director of the US Centers for Disease Control and Prevention. And shares of the gold miners rose, tracking the price of bullion as it lifted to a new record. Meanwhile, taking a look at what's going on at a macro level, US producer prices were unexpectedly unchanged in February, surprising to the downside, while the annual rate sat at 3.2%. The previous month's reading was uply revised to 0.6% to be 3.7% year on year. However, economists expect the slew of tariffs by the Trump administration, which has sent consumer inflation expectations soaring, to begin showing in the data in the months ahead. In the latest development, President Trump has said a long list of tariff threats would be implemented if the EU does not remove US whiskey surcharges. He's threatened to impose 200% tariffs on alcohol from the EU. Well, the US two-year Treasury yield fell to 3.93%, the 10-year down to 4.26%. While markets maintain there is no chance of a cut from the Fed at its meeting next week, they're now pricing in a 100% chance of a cut by June. The US dollar index up slightly, the Aussie falling back to 62.8 US cents. And risk-off sentiment has seen Bitcoin fall back to 81,000 US dollars. Commodities and mixed. Oil prices have fallen 1% on considerations of an economic slowdown amid the global tariff war. Brent futures at $69 a barrel. Copper's up 1.5% as US Commerce Secretary Howard Lutnick said that copper would be added to Trump's trade protections. Iron ore up more than 1.5%, and gold has moved to another record high and is within touching distance of $3,000, with momentum driven by elevated tariff uncertainty and bets on monetary policy easing by the Fed Reserve. Spot gold up at $2,979 an ounce. Well, let's take a focus on global equities with a particular look at European markets, which have actually outperformed most other developed markets. I caught up with Francisco Juan from Alantra Asset Management.
Certainty is not good for anybody, so it's a matter of time that things settle and hopefully we'll come back to business.
Are you perhaps positioning though for a protracted global trade war?
Well, I think certainly Trump is going to circumvent this U.S. economy. I think he's going serious this time. And we just need to adapt to do business in this new environment.
When we take a look at Europe, it's not just trade, it's also those geopolitical risks, certainly given what's going on with Ukraine and Russia at the moment. How would you sum up the risks posed to Europe right now?
Well, I mean, the European situation, we've seen a bit of a little growth and lower growth than normal last few years, particularly driven by some economies like Germany, some in sectors like the industrial. This geopolitical situation is certainly weighing on Europe, and that is driving also a sort of low modest valuation range in our space. No? So there's some risk attached to that, but we also see the flip side of it as investors. No? We see there's some outcomes where we put some of these uncertainties behind, and we could also benefit from this.
The EU as a bloc has struggled for growth. Do you see that potentially turning around now, particularly as the ECB is obviously embarking
on
a significant monetary easing campaign?
Well, I would say that today you can see the bloc broken in two. Now the southern economies like Spain are doing quite well. It's completely the opposite that is going with Germany now. So the Germans are taking a bit of a serious stance pro-growth policies, and you can see that through recent political outcomes. So yes, I think the flip side of the coin is Europe is getting together, stronger than ever. We're thinking about defense. We're thinking about joint debt, and we're going to have pro-growth policies, and there's a chance we put this low growth period behind. We've been growing around 2% for a long period of time. Europe grew 0.8 last year. So yes, I think we can converge to mean when it comes to growth.
Well, you mentioned Germany has been the sick man of Europe, but of course they're now committing to much greater spending, particularly in terms of defence. But as a bloc, Trump is essentially getting his way in that he's forcing European countries to spend more on defence.
Yes.
What does that mean, particularly as far as that fiscal policy, but also as far as economic growth is concerned?
Well, I mean, there's going to be some areas like defense where you want to be exposed there. Certainly, Europe needs to wake up in certain fronts, and I think it's waking up. And we're going to see more collaboration between countries in pro-growth policies, and certainly we need to react, no? And Europe has been through many phases in history, and we've gone through one by one, little by little, and I think what's going out of the world, we're realizing we might be alone here, so we just need to react.
So investors globally are looking to sell those expensive stocks.
We operate, there's an amplifier of that.
All right, so you're seeing small caps in general at the moment undervalued in your view?
They're tremendously undervalued. So we've been operating in this segment for decades, and with a long-term perspective. The last 2-3 years, we're seeing absolute valuations smash. We're seeing relative valuations to other assets like large caps tremendously smash. What has happened with interest rates over the course of the last few years has increased the discount of small caps to large cap. We've seen little M&A activity in the last few years. So there are a number of factors which are amplifying these valuation discounts, and we see today with like a long-term perspective that we are in a pretty attractive sweet spot if you can have a longer-term perspective in this sort of asset class.
Small caps in general tend to be under-researched, perhaps less focused for the analysts. Do you see that as an opportunity if you do your homework, that there is much greater potential there at the smaller end?
Well, absolutely. I mean, a price-value gap is what we do look for as a long-term investor. When you have big research teams, as we, for instance, do, and you operate in a sector which is under-researched, you have the odds on your side to sort of find that price-value gap. Now, the question now is how that price-value gap closes over time. We with our active ownership strategy, we try to help that to close quicker. But certainly, it is a very attractive space when you can find big gaps between value and price.
Can you give us some examples of what you're doing at Alantra in terms of some of those investments in small caps that are actually paying off now?
I mean, as a general concept, we would try to underwrite a small cap company over a 5-7 year period. We would try that a small cap company to become a medium cap. If you are a pro-growth, pro-expansion type of investor as we are, we would typically buy 20%, a minority ownership in a quality company, typically global, but with local reach. We will try to steer it and help it to move from that small cap, let's say $500 million to 1 billion to 2-3 billion. As you achieve that, the companies achieve a scale, they obtain relevance, and typically they get into the regional index. That means typically more liquidity, more relevance, so a re-rating. So that's a general example of what we try to achieve as a constructive, active owner, no? Trying to help companies to step from a small to a mid-cap level, and that drives a lot of positive futures into the company, and typically all stakeholders are quite aligned with that.
We're almost out of time. Can you give us a couple of examples of those
Absolutely.
companies? For instance, I see CIE Automotive out of Spain.
Okay, well, that's a business we underwrote 300 million 10 years ago, automotive supplier, lowest cost operator. We underwrote a strategy from becoming European to global, setting pretty good operations globally. And we've been winning market share because of our cost advantage globally, and it's been a combination of growth and M&A. So we love that type of situations where you can expand and buy and build and use your capital wisely, and we had one of the best management teams in the planet in this segment, so these are the type of partnership we love.
Another example out of Sweden, ALIG. Tell us what you did there.
Oh, this is a sort of elevator platforms. We pretty much bought the competitor from a private equity. We put money to do that, and what it was, a $500 million market cap company. We bought a similar competitor. We created a lot of industrial synergies, and we're in the journey of that small cap transitioning into a mid cap with a lot of synergies. So this is becoming a relevant global, beautiful niche player.
Francisco de Juan from Alantra Asset Management joining us a little earlier. Let's take a look at where we're likely to get going. Well, unfortunately, another negative start on the cards there, according to SPI Futures, off almost 0.1%, following what we've seen on global markets overnight, with the S&P 500 joining the NASDAQ in correction, having fallen more than 10% from their mid-February highs. Stay with us. The Open is just a couple of minutes away.